There was also a very significant monetary policy support which was extended to the economy. In fact, I would say that this was unprecedented monetary expansion. What do we mean by monetary expansion? This is basically the money put into the system by the central bank, whether it is the US Federal Reserve, the RBI, or the European Central Bank, or the Bank of Japan. This is the pace at which they bought assets from the market, literally printed money and put it there into the system. And you can see those charts over here where we are tracking what we call money supply growth. These are the preferred money supply indicators for each of these large economies. And you can see the US M2 growth from March 2020 spiking significantly higher to levels which have not been seen at all in the last 60 years of US history. Similarly, if you look at Europe, a similar spike. Of course, Europe did see significant monetary expansion in 2008, and this has more or less matched that. US, of course, completely blew out relative to previous monetary policy support. The same thing is visible in Japan as well, where this is the highest degree of monetary policy support or money supply growth which the central bank has permitted since almost the late 80s or 90s. The only large economy where actually monetary policy did not support significant M2 growth was China. But China, as we all know, very unique case. The virus started there, but somehow they seem to have been least impacted, and neither have they responded with very strong fiscal or monetary policies. But across the board, all the other large economies have dramatically increased money supply. Now, when you increase money supply, what does this do? Once again, it makes money available to people, it makes credit available to people, and gives them the ability to navigate this difficult period where economic activity is impacted.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.